Mortgage 101. I'm going to go over a quick, short presentation about mortgages. Let's dive right in. My name is May Lai On. I'm a loan originator and I work for Green Key Financial's the Aloha team. We're a mortgage broker and we are licensed in 7 states. So our team can uh, originate loans in Hawaii, California, Arizona, Nevada, Colorado, Texas, Florida, and our headquarters in Costa Mesa, California. We can also do investor loans for 35 plus states. We have access to 80 plus lender partners for wholesale rates. What's a mortgage? A mortgage is simply a loan that helps you buy a home. Now, principal, when you hear the word principal, that's really the amount you borrow. Interest, this is what you pay the lender for the loan. Down payment, your usual contribution, it can range from 3% to 20%. Loan term, commonly it's 15 years or a 30-year term. Getting a mortgage isn't as hard as you think. So here are some 4 areas that we look at as lenders. We look at your credit score. You're aiming for a 620. DTI, debt to income ratio. You want to keep your monthly debt manageable. So we do an analysis of your debt and your income, and we see where you qualify in terms of what loan product that you are looking for and what you qualify for. Income and job stability. So this is proof of steady income. Down payment. Some loans have 0% down or 3%. So it can be a very small down payment for you to get into home ownership. Types of mortgage loans. So these are 5 main loan products that we have. Conventional loan, so they're best for good credit. FHA loan, so this is great for first-time home buyers. A VA loan, this one's very interesting because this is one of the products that have 0 down for veterans and active military. The next one as well, USDA loan. So this also has 0 down for eligible rural and suburban homeowners, so home buyers. And lastly, jumbo loan. So these are for homes above the standard loan amount. So what do you need? What do you need to get pre-approved, right? That's a very good question. Now, you'll need some documents to get pre-approved for the following. So you'll need your ID, so either a driver's license, passport, social security card, or state-issued ID. W-2 forms, bank statements, tax returns, recent pay stubs, and debt statements. So if you take a quick look here, this is a home buying roadmap. The first area, you'll need to find a realtor, right? Your realtor, somebody that you can trust. And from there, you go to the financing section. This is where a mortgage lender comes in to does an analysis. We receive your documentation. We receive also your application, and we do that analysis to see what you can qualify for. And if you're not ready, don't be nervous about it. Just let your lender kind of tell you what you need to do in order to get mortgage ready. So always trust that your lender will guide you in that direction to prepare you and go from there. So nextly, you'll have here showings. Your realtor will take you to the homes and hopefully find something that you really like. Offer negotiations. Your realtor is going to go to bat for you and do a market analysis, write up your offer, and negotiate, and get some seller credits if possible. Get some counter offers. And next, you'll get your offer accepted, hopefully. And from there, you'll do some inspections. You'll also do some earnest money. You'll drop off as a deposit. And nextly here, number 6, So this is where a lot of activities happen. One of the most important ones is you'll be working closely with your lender and your underwriter. What's going to happen is we are going to look at all the documentations that you have, and basically the lender will check everything line by line. And if they have any questions, they'll be reaching out to get more further information. So that's part of the process. And um, hopefully you'll get your home once everything is done, and off to the races. And yeah, congratulations when that happens. That's a big accomplishment. All right, so what is the benefits of owning a home? Why are you going to own a home? What's the purpose, right? So here are some five main areas that I wanted to point out. Building equity. So here's a very, very important one. So every mortgage payment helps you own more of your home instead of paying rent to a landlord. So that money that you're giving, it's giving it back to yourself and not your landlord. So you're not making your landlord more rich, right? Stable monthly incomes. So with the fixed rate, your monthly payments, principal and interest, they stay the same, unlike rent, which can increase year after year. Personalization and freedom. So you can make your home yours, right? You can renovate it, you can decorate, you can make that space how you want it, and not, have rules from your landlord that you have to follow. Tax benefits. Here's a really, really good one. So, this is where you would consult a tax specialist to talk about, owning a home, right? They can walk you down that path because you can potentially qualify for tax deductions on your mortgage interest as well as property taxes. And lastly, long term investment. So, real estate tends to appreciate over time, so it helps build wealth. All right, common myths. So, here's one that I always hear: I need 20% down payment to buy a property. That's not true. As I shown previously in my previous slides, you do not need 20% down. So, that's a myth, right? My credit has to be perfect. It doesn't. It doesn't have to be perfect. You can qualify with a credit score of 620. You don't have to have 800 plus. So that's a myth as well. I should wait for the rates to drop. Well, ultimately that could be your decision, but it's really hard to time the market. And as you talk to more professionals in the real estate field, they'll probably tell you the same thing, right? Um, what I always recommend is if you are comfortable with that mortgage payment and you qualify, that's something that you want to think through, and uh, to be able to own property is a fantastic thing. As I shown before, it has a lot of benefits. So the longer you wait, uh, the longer you will be paying potentially that money to your landlord. So something to think about. If you can qualify, the mortgage makes sense, you feel comfortable with that payment, right? That's something that I always try to recommend to my clients, so that you can start building equity and appreciation. All right, just a quick analysis here: renting versus owning. So, if you take a quick look at this table, you'll see on the left hand side renting and the right side owning. So, monthly costs: renting, you'll be paying your rent to your landlord. Owning, that mortgage payment, you'll start building equity for yourself. Control, you're subject to your landlord's rules and rent increases. Owning, you'll have full control over your property. Stability, so you're not going to guarantee a lease renewal if you're renting. Now, if you're owning, that's long term security. Equity, money goes to your landlord. Owning, home value appreciates over time and goes to you. Tax benefits, none if you're renting. If you're owning, you can look at those benefits for mortgage interest and property tax deductions. You have to consult a tax specialist to kind of go over that. So just a quick 5-year comparison example, renting. So you're paying, example, 2,500 a month for 5 years. That's about 150,000 to your landlord. Now, if you're owning, you're paying a similar mortgage. You're also gaining equity, appreciation, and it could result in over $100,000 in wealth. Now, I wanted just to thank you so much for taking the time to hear this presentation. Scan the QR barcode on the screen, schedule a consultation. Happy to go over anything, no pressure at all. I just want to be able to bring value and get you educated for answering any questions that you have. Home ownership is possible, and I'm here to help advocate for you and guide you. So let's get started. You can also follow my Instagram handles, the Real Estate Social Club and Platinum and Blow. And thank you so much for your time.